they say money won't buy you happiness, but being broke really ain't a good time. So all I want is just to get paid. I know I ain't ashamed of trying to make a wage now. Money, 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 money makes the world go round. I need money, 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 money.
Hello, everyone. My name is Craig Crow, and I am a field underwriter advisor and a financial coach. And this video was created to give you a better perspective and understanding of what life insurance is, and to show you the different advantages that come with these policies. But first, I wanted to clear the misunderstanding that I commonly hear when speaking to people. When I ask them, what do they know about life insurance? And they say, well, I know it's important to have because it pays for your funeral and you can leave money for your family. But sadly, that's all of the information that they know regarding life insurance. And because of this, some people don't see the value of purchasing a policy because sadly, it's not helping them now in their current situations. They only think that it would benefit their family after they pass away. So, I'm here to educate you on what else you can do with these policies and to show you how to protect your first name, meaning how you can use the living benefits and become your own bank with the cash value that builds up with certain policies, and how you can use those funds for a down payment on houses, vehicles, unexpected expenses that come up in life, or purchasing assets or investing into different vehicles. And I also want to show you how you can leave a legacy for your last name, meaning the knowledge that you will be able to pass down to future generations of how to obtain and sustain generational wealth and financial freedom. I want you to have the knowledge to have a more proactive mindset of how to protect your family by simply getting a policy, and how you can also truly become the lender and not the borrower. Because life insurance will not only benefit your family when you pass away, but I will be showing you how you can utilize a lot of these benefits while you are still alive. So this video will be split into two parts. So for part one, I will just be explaining how the different policies work so that you can have a better understanding of which policies work best for you and your family, and how each one builds cash value that can be used to become your own bank. Also, I will be giving you the definitions of the different words I will be using to explain the functions of how these different words correlate with the policies to help you to your path to financial freedom. Part two of this video, I will be showing you the different illustrations of certain policies and how they work by giving you examples of when a certain monthly premium is paid and how these policies can help you and your family to become your own bank and create generational financial freedom. This will consist of two examples, and they are how an index universal life and annuity policy can help fund your children's college education, retirement, and how your family can invest the tax-free loans that you can receive to purchase other assets or place them into other investment vehicles to create multiple streams of income and help diversify your family's financial portfolio. So stay plugged in for this exciting opportunity that you can take advantage of. Now, life insurance was created to protect your life from natural and unnatural deaths. And some policies will also protect your health, such as critical illness, chronic illness, and terminal illness. And I will be explaining to you the different types of policies and how they will allow you to become your own bank. Meaning, this is tax free money from your life insurance policy that you can use for your specific needs. And also, the different advantages that each policy has to offer. I will also break down the different terminology and verbiage that I will be discussing during this video so you can understand how to utilize these different products to fit your specific needs, such as cash value, dividends, markets, caps and floors, and compound interest. So I will be explaining these terminologies first so that you can understand how they work within each policy. So to explain a little bit of what cash value means, a portion of your premium payments that you make go toward covering your death benefit payout your beneficiary will receive when you pass away, and the other portion of your premium payments are put towards a savings account within your policy. The funds in this account grow tax deferred for the duration of your policy. So this is the part of the life insurance policy that allows you to become your own bank and can help you with funds for your children's education, pay off debt, and help supplement funds for your retirement. Or you can purchase different assets with this to start acquiring passive income to help build your financial freedom. So basically, you are able to receive protection through your life insurance, not only for your life and health, but also build your wealth all in one policy. In this picture, it is showing you what you can do with the dividend payouts with your policy. An annual dividend payout is a yearly payment granted to an insurance policyholder and are mainly offered with a permanent life insurance policy or a long-term disability policy. The dividend amount depends on factors such as profits made by the insurance company, investment performances, and the amount of money being paid into the policy. So the more money that you are placing into these policies, the better outcome you will have to receive a larger cash value savings account. Some of the dividend options within a policy are shown on the picture, and they are being able to take out cash payouts, premium reductions, saving the accumulated cash buildup, purchase paid up additions, or being able to pay down enhanced insurance. So depending on the person and their particular needs, it is up to you to decide how your dividend growth will be dispersed. Now keep in mind, there are policies that allow you to pay the monthly premium to receive the death benefit payout you desire while being able to put extra cash that goes straight towards building up your cash value with the compound interest that accumulates in the policy, giving you the flexibility to cover the costs of your basic death benefit needs while being able to grow your money in the cash value savings account at a faster rate, because all of the extra cash being paid into this is what's allowing you to become your own bank. In my opinion, this is better than it would be if you were to use traditional savings accounts that give you the bare minimum of growth due to the low interest rate being compounded on your funds in those types of accounts. Now, the picture in this example gives a definition of markets, but for me to clarify, whenever you hear me speak about markets or financial institutions, this is any place or system that provides buyers and sellers the means to trade financial instruments, including bonds, equities, and the various international currencies and derivatives. Financial markets facilitate the interaction between those who need capital with those who have a capital to invest. So some other examples of financial markets and their roles include the stock market, the bond market, forex, commodities, and the real estate market, among several others. In this picture, I will show you the protection guards that are put in place to protect the value of your money and its growth with the caps and floors that come with the Index Universal Life Insurance Policy. Caps and floors are financial contracts that limit the exposure to the interest rate movement that comes with an index. As you see in the picture, the fluctuating ups and downs that come with the possible interest rate that the funds in your policy will be compounded with. The cap is a limit that the interest rate will not go above and may limit your maximum amount of growth with a particular policy if your money was fully invested into the market or stocks, but it comes with a floor to protect the downside or negative return that comes with the market or stocks, giving you a constant growth with the money in your policy and ensuring that your funds and your investment will be protected. In this picture, it will show you the definition of what compound interest is, and that would be the interest on a loan or deposits calculated based on both the initial principal and the accumulated interest from previous periods. In this picture, you will see the four most commonly used products with life insurance. Although only three of the products shown actually build cash value, and that will be whole life, variable life, and index universal life policies. Now, term life is a great product to use, even if it does not build up cash value. And I will show you exactly how these four products can work for you and how you can utilize them with the cash value that builds for you to become your own bank. Now, one of the main reasons why people prefer to receive a term life policy is because of the cheaper monthly payments and receiving a higher amount of coverage as well. So for some people that don't have a lot of money, this is the preferred plan because they can still receive the coverage that they need and get a higher payout if they unfortunately pass away during the time frame they have requested for this policy to be enforced. The term life policy is usually used when you have a high amount of debt, such as your mortgage needing to be paid off or your kids needing to be helped for their college education fund. This is designed to help your family just in case something were to happen to you during those crucial moments, so your family will not be placed in a financial burden. Term life is one of the most simplest forms of life insurance to understand. To give you an example, if you were to receive a 20-year term plan with a death benefit of $100,000 of coverage, if you were 35, for example, this policy will cover you until you turn 55. And if you were to unfortunately pass away during that time frame, then whoever you chose as your beneficiary will receive that $100,000. But if you turn 56, this policy will expire and you will have to get another policy. One thing to keep in mind is that once this policy expires, you not only lose the coverage, but you also lose all of the money you have invested in that policy. You will also have to remember that life insurance is based on your age and health. So if you had any health issues that occurred during that time frame, it may prevent you from receiving another policy. And the new policy will be much higher because of the age you would be years later down the line. One of the bonus features that come with certain term plans, it will allow you to convert them over to a permanent life insurance product. This is very useful for some people that couldn't afford a permanent life insurance policy at the time, but they may be in a better financial situation now to receive this coverage. And now, with them having a permanent life insurance policy, This will allow them to build up a cash value and help them to become their own bank. So if you ever receive a term life policy, just remember it does expire and it is only good for the time frame you have requested for this policy to stay in force. Now, some of the key benefits with having a whole life insurance policy are the protection never expires as long as you make the monthly premium payments. It has a guaranteed death benefit that will never decrease to ensure your family's protection from financial hardships. The monthly premium payment will never increase because with a whole life policy or any other permanent life policies, once you are issued a policy, whatever age you are at the time the coverage began, you will be paying the price for that particular age for the remainder of your life or until the policy is paid in full. That is another reason for you to receive a life insurance policy as soon and as young as possible to take advantage of the cheaper monthly payments and the higher amount of coverage available to you. You can also receive tax-free loans from this policy that allows you to become your own bank. And even though you borrow money from yourself with these policies, you can still receive a death benefit. You can receive income tax-free death benefits to your beneficiary, and the cash value growth is not taxed also. These permanent life insurance policies accumulate cash value for future needs and are available tax-free in the form of cash to supplement your retirement income, help pay for your children's college education, or you can choose to do with it however you see fit. There are some permanent life insurance policies that have a set interest rate that allows your cash value to build at a guaranteed rate, and some that fluctuate with growth depending on what policy you have. There are some that even pay annual dividends. Now, keep in mind, there are a lot of policies that allow you to utilize cash value advantages to build your wealth. Always remember, life insurance can fit into anyone's budget. The most important thing is to get coverage in place so that you can have the protection you need to secure your family's financial security. Remember, having something in place is better than having nothing at all due to your current financial situation. Now, a variable universal life insurance policy is a type of permanent life insurance coverage. It allows for the cash value to be invested to produce greater returns. The variable universal life insurance policy are built like traditional universal life insurance policies, but they let you invest the cash value growth in the markets. Some of the advantages with this policy are flexible premium payments, faster and greater potential growth for your cash value, adjustable death benefits, better investment controls, and tax advantages. Some of the disadvantages with this policy are the complex factors of dealing with a fluctuating market and not having the knowledge required to make the best decisions. The cost of these policies do tend to be higher than a regular whole life policy because you are trying to maximize your cash value growth and due to the extra funds you are making into this investment type of policy. There are risks you are taking by investing your money into the market, and it could potentially reduce your death benefit and cash value savings account, and even if not monitored or funded correctly, cause your policy to lapse. I would personally only get these types of policies if you have the knowledge of how the market works because of the ups and downs that come with it, and with there being no safety guards in place to protect the value of your money decreasing. It is a great product if you have the knowledge of how the market works and the certain trends and history of the particular market you are investing in, because it can sometimes give you a greater growth of the funds within your cash value account, unlike the Index Universal Life policy that comes with caps that may limit your potential growth. So, you must monitor these types of policies closely to ensure that its growth is being sustained, because this is a great policy that allows you to become your own bank as well. The Index Universal Life Policy, or IUL for short, is a form of a permanent life insurance coverage that offers a cash value component along with a death benefit as well. The money in the cash value account can earn interest through tracking the equity index selected by you, and can also be partially set to a fixed rate account. Some of the advantages that come with this are the tax deferred accumulation, building your cash value, and it has a flexible contribution that can be made to fund this policy. It is tied to a market index, giving you a faster growth with your cash value savings account, and guarantees a minimum interest rate growth because of the floor protection that comes with this. This is a great policy to have, even if you don't have the knowledge that comes with knowing how the market actually works and the ups and downs that come with the stocks, because of the floor protection that guarantees that you will always have a positive growth with no losses with the funds in your account. It can also fund your children's education, your retirement, purchasing more assets to build your passive income, or to do with however you see fit. Some of the disadvantages are the capped interest rates, not giving you the full potential of growth if your money was fully invested into the stocks or market, like the variable universal life policy. And if this policy is not structured and illustrated correctly, it can also cause your policy to lapse and lose funds in your cash value savings account. But overall, this is one of my favorite types of policies because of the protection it comes with, and by you needing little to no knowledge of how the market works, by giving you a constant growth and helping you to become your own bank. So as you see in the picture, it will show you an example of what compound interest will do with the money in your account, and also how the caps and floors work to protect the value of your investment. So as you see in this picture, it's starting off with a one-time $100,000 deposit into the stocks or the S&P 500 and the IUL policy. These are actual returns that people receive throughout these years. As you see, in 1999, there was a 19.53% growth, and your money was compounded to a new value of $119,530. But with the IUL, it was capped out at 11.5%, giving you a growth with the compound interest of a value of $111,500. Now, if you take a look at year 2000, there was a negative interest of 10.14%, and it decreased the value of your money in the stocks to $107,410. But with the IUL, the floor is a 0%, so you didn't lose the value of your money within that year. As you see at the bottom, at 2018, with all the accumulated growth, with the compound interest, with the caps and floors, with the S&P 500 or stocks, your initial investment of $100,000 has grown to $3,912. Now, with the IUL, with all the growth, your new value from that 100,000 initial deposit has grown to $345,175. Now, you can see how the caps and floors work to protect the value of your money with the compound interest that will help your money grow in your policy and help you to become your own bank at a faster rate. If you are confused on how the compound interest was calculated, just look at this example right here. Now that you have a better understanding of how these different permanent life insurance products work and how they can help you to become your own bank and help you to your path to financial freedom, make sure you stay tuned in for part 2 of this video, where I will be showing you the different illustrations of how you will be able to take advantage of the uninterrupted compound interest that comes with these policies and how they can protect the funds in your policy from any downside returns that come with the market, and how you can make more money than what you initially invested into these policies. Now, read the book, What Would the Rockefellers Do, to see how they created generational wealth. And for a better understanding of how to become your own bank, I would recommend reading IUL ASAP. Now, to help expand your financial literacy and help start changing your mindset of acquiring more assets, I would recommend reading Rich Dad, Poor Dad. And lastly, to help you think more like an investor or a business owner, plus learn about the different tax exemptions you can receive, I recommend you read Cash Flow Quadrant. Remember, knowledge is power. Never stop learning. So, for more illustrations and more updated information, you can follow me on any of these social media platforms, and the information to find them are displayed on the screen. You can follow me and like the content of the videos that you feel were beneficial to you. And if you feel like your family, friends, or anyone that you meet would benefit from this, please don't hesitate to share. I hope this has helped expand your knowledge on financial literacy, and hopefully you have learned something new about how to protect your family and create generational wealth and health through life insurance. I pray you all have a blessed and prosperous day, and thank you for taking the time to educate yourself. And always remember that knowledge is power. So never stop trying to learn something new every single day to enhance your wisdom. Until next time, see you later. At the top right of this flyer is my name, my contact information, and the company's website for you to check out everything regarding different policies and to get a better understanding of the company itself. The scheduling information is to schedule a meeting with me so that we can customize your portfolio and to start protecting your life's journey by creating generational wealth, or I can help by answering any questions you have. Just simply enter the scheduling information link into your web browser. This will bring you to a Calendly website that will allow you to pick any date and time to schedule a meeting with me. As you can see, life insurance is not just death benefits, it provides living benefits as well. It also provides coverage for 3 categories of life's journey, such as your life, health, and wealth. So contact me if any specific policy sticks out to you. We can discuss it in more detail and customize your portfolio to fit your specific needs and budget.
Yeah.